Morning, good afternoon. Hassan, Brian, good to see you guys. Right, we're just going to unpick that PPI print that we've just had. Folks, let's get stuck into the session. A few things to cover today. Good morning, Najam. Good to see you. So the first thing to be aware of is we've had this stronger than expected CPI data out of the UK. Coming in above market's maximum expectations. That did give the pound a little jump this morning, but be very, very surprised to see that lasting, because the Bank of England is moving to a rate cutting scenario, and slightly firmer inflation data is unlikely to change that broad outlook. There's a lot of things dragging on the UK at the moment, and if you look at the reaction in the pounds, you can see it's been relatively muted. We have had a little bit of a jump early in the morning in the UK, but very muted. You know, you see it's up, down, up, down. Yes, it's one of the strongest currencies of the session, but it's nothing that's massively tradable. We want to see low inflation data to give us opportunities with the pound. So what you need to look for the pound is when inflation comes in below market's expectations. And remember, the Bank of England, Bailey, has been saying about employment, that if they see employment data weakening, then we'll likely see interest rate cuts coming from the Bank of England, and probably at a greater rate. So that's the thing to look for. It's UK labour data, and I'm not sure when the next employment data is. I think, yeah, it's coming out tomorrow, you see. So markets are going to react more to this than they are to inflation. And good morning, Carolyn. Well, afternoon, sorry. What we're looking for here with the employment data is if this surprises markets, if the employment changes under 30, if the unemployment rate...
around 10 minutes until we get the US industrial production and manufacturing output data for June. Industrial production seen up 0.1 month on.
If that comes in above 4.8% for the unemployment rate. If the average weekly earnings comes in below 4.8%, average earnings excluding bonuses come below 4.8%. If we see a miss across the board here, then look for immediate pound selling, and we'd look for euro pound buying. That's for tomorrow. Okay, euro pound buying, just bear in mind that we've got inflation data out for the Europe shortly afterwards, but euro pound upside would be reasonable. Bank of England is waiting for an excuse to move to more aggressive interest rates. This doesn't give it, and it doesn't give us an upside bias either, just because it's, you know, it's not like the Bank of England is going to be staying higher for longer. They really want to be cutting interest rates, and that's where they're moving towards. Now this PPI print is more interesting, okay? Now, if you remember yesterday, we had the weaker CPI print out of the US, right? We saw that here. And you can see out of the US, we had the inflation data come in, core below the expected of 3, headline slightly higher at 2.7%, but the core month-on-month 0.2%, yes.
Just a note for job prices, J&J executive says 2025 outlook does not include impact of most favoured nation drug pricing.
Yes, but inflation moving lower, okay? And that's in line with this kind of trueflation index that I've been flagging up to us as like, I am expecting inflation to move lower in line with the live prices. And now, but remember yesterday, and this is what happened yesterday, we saw this weird reaction in the S&P 500, right? We saw, and just before the open, we saw it, the S&P 500, where was it? It's down here, wasn't it? Yeah, okay. We saw it moving higher. That was the print yesterday, right? We saw it moving higher, retest those highs, and then sharply sell off at the open. And the markets kept moving lower and lower and lower and lower. And that was because, for this reason, and remember I said about the data, it was weaker, but then economists like, you know, Nick Timiraos, and we heard on the Squawk, they started looking at the data, and what they were saying was thinking, you know, the big news in my view is that core goods prices, excluding autos, jumped by 0.55%, the largest monthly increase since November 2021, right? So in other words, this happens sometimes, markets look at the data, then they look at the detail, and then the market can move on the detail. That's what happened yesterday. So now what we've had is another data print that's weak for today, which is the PPI print. Now, if you look at the PPI, and this, you know, this is what producers are paying. So when this goes up, it tends to lead into consumer price pressure. So if this is falling down, that's good, right? And that's what you see. Look, below market's minimum expectations, below market's minimum expectations, below market's minimum expectations. 3 prints below market's minimum. The prior's revised higher, but in one sense, oh, good, okay, it was even worse, but it's even better, right? So you can look at that 2 ways. But bottom line, this flows into the Fed's preferred measure of inflation, and some of the early reports are coming in about what this means. So Morgan Stanley have lowered their core PCE reading to 0.7% month on month in June, and I think they saw year on year at 2.4%. So if you then look at the PCE print, so that was the PCE print that came, Fed's preferred measure of inflation, came in at 2.7%. And what they're seeing is that coming at 2.4% after that PPI print. I think that's Morgan Stanley. I'm pretty sure I heard that on the squawk. I can't see it on the record, but the month on month print is expected. Where is it? Not that one. So that's the, let's get on month data. Where is it? Core PCE index month on month. That's what we want. There we go. Expected to come at 0.27%. And before they saw it at 0.35%. So in other words, they're seeing lower inflation after that PPI print. So what does that mean for stocks for today? Obviously, lower inflation means earlier interest rate cuts and should support equity markets. Now, I took a long out of this data, right? And I'll show you the rationale and the reason, because low inflation should support stocks higher. And you see, I just went onto the tick chart, and I had the first opportunity where sellers got trapped, which is here. And I entered long as buyers took it above those sellers here. So sellers trapped, entered long, and you can see here buyers holding price, took it off just up at those highs there. Right? Then we got another pullback, sellers trapped. Those sellers were trapped. There's another opportunity to go long. I took another opportunity long as those sellers got trapped. But just seeing it stall around the highs, just exited for a very, very small profit break even. Now, what that's going to mean for us is we're just going to be conscious that we don't see a sell-off like yesterday. Right? That caught me out and had to make it up on the way down. So we'll be looking at further reports as it comes in on what economists that PPI print. For now, good news. Lower inflation, supporting stocks. But look at the way the dollar reacted. It was up and down, right? So dollar up and down. So a little bit nervous about this reaction. Gold, silver, just off the lows. Look at 10-year yields. Do you see they're pulling down, which is what you would expect? Because if interest rates are expected to fall, then that pressures bond yields. I mean, you can see 10-year yields falling lower on the data. It makes sense, right? That all makes sense, and that's what you'd expect. And don't forget this relationship. You can see here this relationship between the yen and 10-year yields. So when US 10-year yields go up, the yen goes down. Where US 10-year yields go down, the yen goes up, right? So that means the reaction that you'd currently expect is if yields are going down, you'd expect dollar yen to move lower, right? But notice we've kind of had the dollar yen move lower, bounce off that pivot point, and now like trying to make highs and try and push up into this region. So technically it's a dollar yen sell, but remember the reaction yesterday. So look at it by all means, okay? And look for sort of price action signals around this area, maybe looking for sharp pullbacks, and then selling if price moves back in line with the trend, right? So if price moves back underneath that trend line, then dollar yen selling would make sense, okay? Given the fact that inflation's slightly better than the markets were expecting. But bear in mind, there's this two-way kind of dynamic. Some traders are looking at the CPI print and going, oh goodness, you know, others are looking at the PPI saying, yeah, I know obviously we had Trump yesterday, you know, putting his fist in the air, cheering the low inflation, but economists were saying, nah, it's not so low. Okay, so that's the kind of the uncertainty about it. For me, I'm maintaining my silver longs and looking to get back in again for another position. We hit the kind of area where I was looking to buy from, which is this region here, right? You see we're breaking up above that major trend line. And so any retracements there, we're expecting to find buyers. We kind of hit it We found buyers on that first test, which is there's that blue line, looking for a move back down here and then up. Looking here, see if we potentially get head and shoulders pattern. If you remember this, Ryan, from yesterday, we were looking at that head and shoulders pattern there to see if we got left shoulder, head, if we got a right shoulder. We didn't get the right shoulder, sold off. Might look at it here, see if that's like, left shoulder, head, right shoulder at an angle that can become a nice breakout level. So either way, looking at that trend line for potential breakout in silver, that is fine and something to be looking at actively. Now, in terms of the rest of the calendar, let's just have a look. I'm just going to have a look who's speaking later. Got Hammock at 2:15, just to make sure turn the score. All right. And we got Kugler at 3, Barr at 3, EIA inventories at 3:30, Cook at 6:30, Feds Williams at 11:30. So a few Fed speakers coming up.
And industrial production, that's above expected 0.3%. Manufacturing output, that's 0.1%, despite expectations for unchanged. And the capacity utilization, that's 77.6%, above the expected 77.4%. So industrial production, higher than expected at 0.3%. Markets were looking for 0.1%. Prior was revised to unchanged from negative 0.2%. Manufacturing output, it's up 0.1%. Markets were looking for unchanged. Prior was revised up to 0.3% from 0.1%. And then capacity utilization unexpectedly jumped to 77.6% against expectations for unchanged at 77.4%, though the prior was revised up to 77.5%. And then Fed's Hammock does not comment on monetary policy or the economic outlook in her remarks.
Yeah, Aussie.
An update via Bloomberg, Canada does weigh limiting lumber exports to solve US trade dispute.
It's tricky with the Aussie US dollar, Najam, because could sentiment turn risk positive now? It could, because you got that right. So you've got that close correlation between the Aussie US dollar and the S&P 500. If we look at, where is it? Let's just go over to it.
Further on the topic of Israel says it will not allow a military build-up on its border with southern Syria.
Right, so if you look at the S&P 500 and the Aussie US dollar, you can see there's quite a close correlation. So, right, if the SE mini is going to be heading higher, you'd expect Aussie US dollar to head higher. But we saw what happened yesterday. You know what I mean? One thing that I noticed technically, Najam, and it's just worth looking at, is the where is it? Yeah, look at that bullish piercing line pattern. That held as support for the S&P 500. Nasdaq, bullishing piercing line pattern, that held as support. But look at the Dow, that wasn't a bullish piercing line because we didn't close above the 50 and it hasn't held as support. So I would say at the moment, potentially, if we see sentiment deteriorate, yes. Okay, so that's another PCE. See, that's the thing to look out for, Najam, is those what everyone's saying about the PCE now, because that's probably what's going to move the risk sentiment. We've also got Trump saying 5 to 6 deals are being worked on, 2 to 3 expected by August the 1st. Then we had ASML give their earnings, and as you rightly pointed out very helpfully yesterday, most of these earnings impact the Dow, but the ASML does have a 1% weighting with the Nasdaq, and that is seen as they're walking back on their 2026 outlook, and it's down about 8%. Yeah. Oh, nice, Najam. Oh, crude futures. Yeah, it's a nice pattern, isn't it? It's a very nice pattern. It tends to be very reliable. Great stuff. Yeah, so that's my take on the Aussie US dollar. Now I think that now let's have a look at the E-mini as the kickoff basically. So we've got that bullish Pearson line for support. You see this region here, that's been strong support. So we've had a strong support area, but we've only been able to go as far as that standard deviation on the daily chart. So we're kind of reaching a critical moment. And you can see here that sellers trap buyers here, and we've only managed to move back up there. In the weekly, you can see we've bounced off support, and we're now sitting under the point of control, but price has been quite extended, and support now rests quite nicely at this 6285 region. Looking on the 15-minute chart, we can see that we've moved up from the open, up from the data, hit the second standard deviation and pulled back. So getting back above, say we get back above that 15-minute here, then we can look for a run up to 6310. Otherwise, any moves back down to...
Further from the Israeli military official says they are in close contact with their US partners.
Yeah, any moves back down to here, yeah, 6284 is suitable for buying, particularly at the open. And also, I'd probably say that's suitable for buying off this area here, because you've got that value area, developed value area from a previous day, sitting on the standard deviation. So I would buy in there at the open, right? Just I feel confident with that. So if you get a drop down to that region, just look for it to move and bounce. And again, if buyers can go up above those 15-minute sellers up there, I feel confident with that as well. Looked at it on the tick chart. You can have a look at the tick chart as well, but I'll probably want something a little bit more vanilla for the open. Had quite a few sellers there. See them getting trapped, then I'm happy to go long up into that 63,000 and see if we can break out of these sellers here. See them getting trapped, then we could look for some more upside. All right, folks, so that's my take on it. Yeah, Pantheon Macroeconomics, very good economist house. They see, they see the PCE, right? So this is what they're saying. Pantheon Macroeconomics is they see this core PCE moving up to 3.25% into this year. So they see it moving up. They see the month on month at 0.35% in June, and they see it at 2.7% for June for the headline. So you see, you got a difference there, right? You've got one economist house. Let's just see who it is. Morgan Stanley lowers it to 0.7% month on month, and they're sort of 0.35%. So Morgan Stanley sort of Pantheon Macroeconomics, they see the core at 0.35% in July. They still see that coming. So Morgan Stanley say better than expected. Pantheon Macro are saying the worst is still to come. So where does that leave us? Any the wiser? It's certainly not clear, is it? But that at least explains what's going on in terms of the macro outlook. Buying bias remains for now. Okay, now if we get sort of these buyers trapped, we can definitely start looking for sellers to come in. Right, a lot of delta suddenly popped in there. And what was that about, hey? A lot of delta popped in and there's absolutely no movement. So we're going to keep our eye on that. Okay, I'm just going to get rid of... Just going to move that to break even. And I think that's it. Okay, just gave it a slight chance. I'm out of it now. I'm going to have a look at how it reacts moving forward. Just took a quick profit on that. Now you see buyers coming in against that standard deviation, which is not a bad area for buying. So I would expect buyers there. So that's an interesting area. If I can get buyers anywhere here, I'm going to get in. We'll look on the tick chart. Right, sellers coming in. If I can get buyers coming in above that standard deviation here. Right. Not yet. Right, I'm going to try a little buy there. Just stops here. And that's just to see if I can get a little bit of a pickup from that level.
Further from Israel military says it has attacked a military target near the Syrian presidential palace in Damascus.
Okay. Okay, price now coming up. So I'm going to move it up to the point of control. Just moving that to break even now because we've had a test of that standard deviation. Okay. Now tricky, but I'm going to leave it at break even. Maybe you get lucky. Maybe I won't. We'll see. Okay, I'm out at break even. So now got to be careful because kind of had an opportunity. Now let's see what happens.